Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, well, new year, new all-time highs for the S&P 500, cracking through the highs, 691. However, the Qs lagging a little bit behind because big tech hasn't really showed up in 2026 so far, but we did also have new all-time highs on the Dow Jones. Now, that being said, guys, today was a very good day of market breadth with most of your market participating with some upside gains. And in the new year, you have some of the same recurring themes. Now, number one, we have the metals really outperforming so far. Gold having a nice little rally into the beginning part of the year, and even something like silver as well, approaching previous all-time highs established just a few short weeks ago. Additionally, we have some other common themes that we saw in 2025, which are these themes right here. If you take a look at the biggest gainers and losers of the day, SanDisk, the memory names going absolutely insane again, everything from SanDisk to WDC and even Micron up 10%. Absolutely fantastic gains. So some of your year-to-date performers, guys, are the exact same as they were last year. If you take a look at your year-to-date returns so far, look at SanDisk. It's only a few short days into the new year. SanDisk is already up 47% after putting in a 500% gain last year. And most of the names in the top 10 performers are all semiconductor chips and or memory names as well. Shout out to Moderna, though, as well, squeezing its way into the top. But you can clearly see a lot of action here on semiconductors as the AI trade continues on its march higher. Now, in today's video, guys, we got a whole bunch of things to talk about because there was a lot of action today. And we also have a few volatility catalysts to keep watch on in the future, in the next few days, tons of jobs reports. So in today's video, we're going to talk about all of it. Part number one is going to be dedicated to a little bit of a news recap. Not too much news today, but some interesting elements in the tech world. Number two, we're going to go through our technical analysis on all our major indexes, check on the rotation, check on the market breadth, all of that good stuff, and take a look at our sector rotations here. Thereafter, we will take a look at our big tech names. We know that big tech hasn't been the most favorable trade, at least in the last 2-3 months. A lot of names are kind of lagging behind the general S&P 500 performance, which is why your Qs really haven't shot beyond the all-time highs just yet. A lot of these names are lagging, but some are coming alive, such as Amazon did today. So we'll take a look at our big tech list and see which names are best positioned into 2026 and what we could possibly do with that. And at the end of the video, of course, we will cover our biggest gainers and losers of the day. And once again, play the game that we played last night. Is it too late to invest in some of these names that printed the highs today? And in contrast, is it a good time to position in some of the names that were on the lows today? So it should be a very fun and action-packed video as per usual. I'll remind you all the time, the links to various segments of the video will be down below in the video description. So to keep that in mind, let's jump right into the action, shall we? So the S&P up 0.6 today, the Qs up 0.88, and you can see very healthy market breadth all across the board. Taking a look at your heat map right now, not too bad, but some big tech names are lagging behind, Apple and Tesla and Google specifically. And shout out to NVIDIA, even though they had a beautiful CES conference yesterday where Jensen Huang posted a number of very beautiful updates for the company. Sadly, NVIDIA getting sold back down off of a 2% early morning gain again. I mean, this has happened to NVIDIA several times over the last couple of days. If you guys have been watching the charts very early, NVIDIA with the gap up opens and sadly then the slides. That was a gap down, actually. Gap up open and the slide. Gap up open and the slide. Gap up open and the slide, and another gap up open and the slight slide. Now, we're not really losing too much price on NVIDIA, but something is brewing on the NVIDIA chart. So we'll pay attention to that one as we move through the early portions of January. Take a look at the rest of the heat map, though. Financials, very strong. And if you watched yesterday's video, which were the key themes and trade ideas into 2026, you would understand why a lot of these financials are positioned really well into the new year. Healthcare, a beautiful day as well. And the bottom half of the market not performing too poorly either. Everything from defensives to industrials and many other segments of the market were moving higher, except for energy. So sadly, the big oil push that we saw from the Venezuela news over the weekend, which translated into higher oil stock company prices yesterday, well, a lot of that was unfortunately unwound today as people did come to the realization that maybe a lot of these crude oil outputs from Venezuela are going to be taking a whole lot longer than people were earlier anticipating. But there was some nice momentum yesterday. Hopefully you're able to maybe make some gains if you're day trading or whatnot. But once again, just remember that these, the impacts, or rather the what's going to come out of Venezuela is going to take a very long time. It's going to cost a lot of money to bring it out there as well. Moving on to the one-day relative, you can see that even better that our market was very broad indeed today. Everything moving higher, led by basic materials. To the downside, communication services and energy. And on your 1 week relative performance, guys, the market breadth looks very attractive right now. Only consumer defenses and communication services, which I'll remind you is largely Google and Meta, lagging a little bit behind, but everything else performing very well. Now, fear and greed still stays at about the neutral range as we are in a greedy environment in terms of distance away from the EMAs, but in terms of stock price strength, meaning net new 52-week highs and lows, we're not really printing that many new highs, although the market is rallying in a nice fashion. There was a lot of damage here done in the end phase of October and November, and as a result, we're kind of just recovering on a lot of fronts right now, and stock price breadth, well, although not as high as we had earlier in July, has improved, but we are still in a somewhat fearful environment. As a result, mixed reads across the board, so you remain in a bit of a neutral status right now. Now, before we get into more technical analysis, guys, let us go over some quick pieces of news that we have to pay attention to for the rest of the week. And of course, it all starts with the jobs reports. Big volatility catalysts on the horizon. We know that 2026, at least the early portion of 2026, is going to be all about the jobs market. Last year, there were two parts to this, to these concerns, right, for the market. Number one was inflation, but as we can see from the inflation index read right now, inflation is no longer a problem whatsoever, 1.87%. So inflation will not be the talking point early this year, in my humble opinion. And the Fed does agree with that as well, as they do see the PCE inflation rates from their summary of economic projections moving substantially lower through 2026 and 2027. No, it's not going to be about inflation this year, especially early on this year. It's going to be a lot about jobs. And we got a bunch of jobs reports coming out in the next few days. So you definitely have to pay attention to this one, right? I was saying in yesterday's video, if you wanted to just take some profits, especially on some short put trades, the wheel trades, things of that nature, into the rest of the week and just kind of wait out these volatility events, because you know the market's only focused on jobs, right? It's not like we have to pay attention to the CPI reports that much anymore. They haven't been moving the market substantially in the most recent 3-4 months, but the jobs reports definitely will move the markets. And you got a few of them. Tomorrow, ADP private employment change, and additionally, you have the JOLTS jobs openings. Doesn't stop there. Thursday morning, you get the Challenger job cuts as well. This one rocked the markets, if you remember, back in November. So pay attention to this one too. And then lastly, pay attention to number 3, which is going to be the biggest one, the non-farm payrolls for the month of December coming out on the Friday session. And you also get the unemployment rate too. So the next 3 days, jobs, 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 and this will likely set the tone, at least for the midpoint of the month of January into the end, possibly, before we start getting the ever so important corporate earnings reports. Now, we know that this week there's not that many earnings reports. No, it all starts next week when we start getting the big banks. However, right, these jobs reports can have a somewhat, let's call it, medium-term lasting impact on the markets, right? If the jobs market, if reports come out very weak, well, you may not be able to push these all-time highs much before we get a lot of earnings releases, right? The markets may just take a little bit of a breather. Not that they've been on a tremendous tear so far, but it's going to be very tough to keep pushing these all-time highs if the jobs reports show that they're a little bit weaker than anticipated. A lot of people are going to have a bunch of questions, and I would assume that positioning would kind of lighten up into this Q4 earnings period of time. So please keep that in mind. In terms of other things you got to look out for this week, well, here you go. You got a big tariff decision on Friday. The Supreme Court is supposed to be giving a few key rulings on the tariffs and their legality on the Friday session. So keep that in mind. U.S. tariffs that are at risk of court-ordered refunds exceed $133.5 billion. That's going to be something big to watch out for over the course of the Friday session. So pay attention. You got a lot of volatility catalysts coming up soon. It's been a very peaceful last 2 weeks in terms of the fact that there wasn't many market-moving news events, but that all changes for the next 3 days. So just be somewhat cautious in terms of your positioning, in terms of paying attention to these very big pieces of news. That should be fairly interesting to look at. Moving on, we got some news here, tech specific and other market specific. You got some oil updates right now. Your national average for the price of gasoline right now at the lowest that it's been since 2021. The average price per gallon, $2 and roughly 82 cents. Not too bad. You can see that a lot of the lowest prices that you can find in the country are located in central US to the southern portion of the US. And unfortunately, your coastal states well, sadly, because of possibly tax reasons as well, have a higher price per barrel. But on average, you do have very low prices of gasoline, which does help people's pockets a little bit. Moving on a bit further here, guys, NVIDIA, after their big report yesterday, well, the CFO came out and saying that the demand has increased since their $500 billion forecast that they put out last quarterly earnings. So very strong. NVIDIA keeps pushing the boundary. You might remember we read the headline yesterday as well, to where NVIDIA released their Q4 projections, $3 billion higher than anticipated. Well, now, not only for Q4, but maybe even into the rest of 2026, your demand and your revenue numbers may just be larger than anticipated. So NVIDIA is still probably one of my favorite stocks leading into 2026 in terms of their ability to continuously raise revenues and present very high margins. Now, you also had other presentations yesterday during CES, namely AMD's. And here you can see a comparison between Jensen's Vera Rubin and Dr. Lisa Su's MI455X. And you can see there's a fairly large size difference as this user posted here, in comparison to the AMD rack, right? Or rather AMD unit, and thereafter the Vera Rubin, which is considerably smaller. But what about the power outputs and the specs? Well, we got that one for you too as well. So here's your new MI455X on the left-hand side, and then benchmarked against NVIDIA Vera Rubin, which are both future iterations for these two companies throughout 2026. So your peak performance still goes to NVIDIA, able to generate a bit more peak performance there. The AMD cards, however, do have a very wide gap in terms of your memory capacity, 31 terabytes versus the 21 terabytes for the NVIDIA Vera Rubin card. Your memory bandwidth is exactly the same. Your per GPU power, which is very important coming into 2026, is better on the MI455X from AMD, considerably better, as a matter of fact. And they do run a slightly smaller architecture as well, using a 2-nanometer process versus the 3-nanometer process for NVIDIA. But the benefit of the NVIDIA cards, yes, better peak performance, but additionally, better software ecosystem by far. Arguably, this is NVIDIA's true moat when we talk about the data center ramp. It's the CUDA software ecosystem, which many people are very pleased with, especially when you work for them. And it is also what most of your engineers will be trained upon into the near-term future. But interesting comparison between these two releases presented at CES in Las Vegas yesterday evening. Moving on a little bit further here, Meta with some news headlines. Meta delaying the global rollout of the Ray-Ban display glasses on strong US demand from a supply squeeze. Very strong. So they're delaying plans for the UK, France, Italy, and Canada, citing tight supply and strong US demand. I will remind you, these are not the traditional vlogging glasses, the usual Meta Ray-Bans. No, they're the ones with the display characteristic in the lens, the actual smart glasses. So these will be coming out. Meta actually presented these to us about 2 months ago at this point in time, and they will be rolled out during 2026. So nice to see that there is some very strong demand from this brand new product from Meta. Moving on a little bit further here, we got some news from Amazon, which should contribute to their massive rally today, over 3%. Amazon AWS raising pricing when nobody was looking, and people actually found this one out today. It did contribute to some of the gains, but there were several other smaller pieces of news on Amazon today, such as Alexa Plus being included in more TVs, in BMWs with the partnership, and many other different avenues as well. But we know that Amazon's been accumulating a big base of support around the 220, 225 area, and you guys know the longer you accumulate, sometimes the breakouts can be quite substantial, and maybe Amazon's going for its own. This piece of news helping out, raising GPU prices 15% on a Saturday, hoping you weren't paying attention. So raising their prices on a lot of their GPUs, a lot of H200 GPU clusters as well are part of those price increases. So a very nice piece of news from Amazon right there. And last but not least, you got some more news from Amazon here. Very nice chart posted by ARK Invest after their research. This is a chart comparing and contrasting the Amazon employees versus Amazon robots. And this is a part of my core thesis for the business as well, which is why I've been building such a big position. It's all going to be about the margins, the free cash flow for Amazon, and how are they going to accomplish that? Well, by keeping their employee count steady, while raising the amount of robots, which is the purple column down here, that they utilize per year. You might remember so many reports in terms of employment from Amazon came out about 2-3 months ago, to where Amazon was not hiring as much as it once had previously, but also into the next 3 years, we'll be able to cut hundreds of thousands of jobs, not existing jobs, but right? This is what they meant when they were talking about cutting the need for jobs into the future by replacing, unfortunately, a large portion of their labor force, or rather potential labor force, because they're not cutting these people. They're replacing future possible job scales with robots. And this is going to obviously contribute in a large factor to margins and free cash flow for the business, which is something that Amazon has never been known for. It's never been known as a free cash flow monster. It's never been known as a net margin monster. But pay attention. This is also one of the hottest robotics companies on the planet right now, but nobody ever really talks about it in that angle. Those are your big pieces of news for the day. Hopefully you guys enjoyed. Now, let's jump into some charts. Now, moving into the SPY and our rest of our indexes, I'm not going to spend as much time, obviously, as I did yesterday, but just to quickly recap, if you guys haven't seen yesterday's video in terms of the 2026 themes and trades to explore, we did a full sector rundown, and I did say which sectors I preferred in terms of into 2026, and why and how I was choosing to play those various sectors or those various stocks. I will remind you, I am still bullish into 2026 because of all our bullish tailwinds, strong GDP, the rate cuts, and the end of quantitative tightening, the relatively low unemployment situation, although we're gonna have to pay attention to these jobs reports this week, of course, the low inflation prints, the very strong earnings that we stand to have as well. Keep in mind, guys, in terms of earnings, you're growing EPS on the S&P 500 companies at about a 15% clip, which is right a lot higher than the past 10 years. Past 10-year average EPS growth was about 8.6%. And I will remind you, I've shown this chart a few times, but here's another updated version, right? In terms of your total returns for the past 3 or 4 or 5 years, excuse me, depending where you're looking, right? You can see here that in yellow is your multiple growth. We know that expansion in the markets comes from two different locations for the most part. Number one is pure multiple expansion. Number two is actual earnings expansion. Normally, you want market expansion to come from actual company fundamental earnings expansion. Not so much the market just running super hot and expanding multiples, even though the companies have not expanded their fundamentals that quickly. You can see in 2023, right? 2023, there was a lot of multiple growth because you were coming off of multiple compression and crush in 2022. So that's very normal. As we moved into 2024, you still had a decent portion of multiple growth, but you can see a lot of it was coming from sales growth and pure margin growth for these companies. And 2025, there wasn't that much of the gains, even though we had a beautiful year on the SPY and QQQs. There wasn't that much coming from multiple expansion. So all of these bubble allegations and the fact that the markets are somewhat overvalued across many different fronts, yes, indeed, are somewhat valid. But you also have to remember, guys, companies are growing earnings at fantastic clips, even into 2026. So I am very bullish on earnings this year. You also have the AI megatrend, and you have the massive $4 trillion in tax cuts coming into play through many different sources, both some specific to consumers and some specific to businesses through the instances in the big, beautiful bill. So keep that in mind. I am bullish on this year, but it could be somewhat choppy as well. You know that it's a midterm year, and here's your midterm seasonality. Take a look at this right here. You'll see that this is the average year in black. Midterm year, somewhat choppy as well. So there is still a few narratives at play here, such as the softening of the labor market and the market being somewhat overvalued, depending on which metrics you are looking at. Matter of fact, on a lot of metrics, the market is somewhat overvalued. So this year, you do have some narratives that can come into play to which would result in a bit of choppiness. And you can see normally in a midterm year, the month of January is not the best. And even all the way through the midpoint of the year, right? A lot of choppiness. Now, obviously, these are averages from 1970 through 2021. It doesn't mean that you will exactly follow this path, but it could be a little bit choppier than we've been used to, at least in the last 3 years. So please keep that in mind in terms of your positioning overall. We talked about that a lot in yesterday's video as well, and how I was addressing some of that positioning and which sectors I thought could be poised to have a good 2025 as we get the rest of the expansion of the market and more market breadth, right? We know that the last 2 years especially have been very tech and AI focused. And although I do believe that this year as well, there will be a lot of focus on tech and AI, we do have a lot of other catalysts that can lead to the broadening out of the market into different sectors, which may not be as volatile as the tech and AI trade. So keep that in mind. Moving into the SPY right now, beautiful daily uptrend. And we were talking about this yesterday, right? They were looking really good for the expansion of the daily uptrend, and they got it into the brand new all-time highs. If the jobs numbers come out weak and we have a little bit of a decline. Just keep that in mind that we have a nice support level below us right now, 684 down to 679. Line in the sand is right down here, 679. So as long as you don't lose this level, the bulls are in full control on the short-term time frames. The weekly time frame also looked pretty good. We were saying that this looked and felt like a bull flag. So far, the bull flag is looking like it does want to push and expand to the upside. But of course, with the jobs numbers coming out in the next 3 days and with this big tariff ruling coming out on the Friday session, well, it might just still be anybody's ball game because we haven't really created that much distance beyond us from these lows. So please keep that in mind. The bulls are indeed still in control, but you do have some events here that could snap us back quite rapidly in the event that they are not well received by the markets. Moving on to the QQQs right now. Qs, I mean, we're kind of just tightening up, right? You can kind of see it right here. So although, yes, we're going for the same thing as the SPY, you're going for the daily uptrend break right now. We do have support below us, 613 and a 604. Keep in mind your higher low here, 610. You lose that without new all-time highs, daily downtrend, and you can tighten up this weekly even more, right? This is a very nice tightening range and a bull flag. The bulls are currently in control. The bias is indeed long. However, as I said, pay attention to those news events in the next few days because they can snap you back in the event they are not well received by the market, which I do believe will be a nice buying opportunity. So just don't panic. Of course, we'll be covering these as we move through the rest of the days of the week together, but I am still fairly bullish in terms of my positioning. I have a lot of buying power now. I took a lot of, you remember yesterday, I showed you guys the portfolio. Today, I did even more profit taking on short-term trades and especially wheel trades. So I have a ton of buying power to go shopping in the event that we get a bit of declines, and perhaps you should as well. Moving into the XLF financials right now, another very strong day for financials, not taking out the highs of yesterday's, but still very nice continuation, right? Beautiful daily uptrend. I mean, it's been a daily uptrend this entire time. Financials really performing in a good fashion, and we were talking about financials a lot yesterday. So if you haven't seen yesterday's video, again, definitely suggest you go watch it. We were saying that not only the banks could have a good year this year, but a lot of the credit card companies, the financial data companies, and maybe even a resurgence in some of your insurance companies, which didn't really have a very good 2025. So we can see a very broad financials landscape this year. So if you want to make the most of it, I gave a lot of names and ideas in yesterday's video. That being said, got a lot of space right now. Anything above 54.38 on any fallback would we be looking for a higher low for possible further trend continuation, daily full bull control, weekly full bull control as well. Your weekly higher lows now established at 54.35. Fantastic weekly uptrend right now. And on the monthly, going for the infamous monthly breakout. We were talking about this the entire time we were consolidating in November, December. You may remember me pounding the table on names like Visa, MasterCard, and other names like SPGI and Moody's. Well, a lot of those are currently embarking on their breakout after that bottoming out pattern, going for the exact same thing. The monthly uptrends on Moody's Corporation, trying to reestablish the monthly uptrends on SPGI as well. So overall, the entire financials landscape looks pretty good and is one of my favorite trades into 2026. Moving on to healthcare right now. Beautiful day by healthcare, led to the upside by big players like Eli Lilly and the likes. And moving on further here, we know that we had equal lows roughly. We were saying you got to pay attention, right? Because they were tightening up for the last 2-3 weeks into the holidays. And now you get the breakout. So beautiful new daily uptrend by the bulls right now. Higher lows, 153. Any move lower, you guys know the drill. Higher low, possibly for further uptrend continuation. That's if they don't just keep pushing right now. The weekly has always looked very good on healthcare, if I do admit myself. We were kind of tightening up here for a while, right? Same thing as the SPY, same thing as the Qs. And now you're just going for the expansion here of the trend and also the monthly time frame looking quite good into 2026 as well. After doing a whole bunch of nothing for the past 2, 3, 4 years, maybe, just maybe, this year and 2027 can be years where you do find healthcare trending a little bit more in line with the rest of the indexes as opposed to just doing a whole bunch of nothing. So healthcare, still a very strong sector in this year as well. Moving on further, let me move myself over into semiconductors, your best trade of the year so far, right? New year, but still some of the exact same themes that we've been seeing so far. That being said, semiconductors, a huge breakout and a beautiful start to the month of January. 3 very, very strong days all across the board, right? You got Micron pushing higher, you got LRCX pushing higher, you got ASML, even though it's not in the S&P 500, you got ASML pushing substantially higher, right? Essentially, the whole rest of the semiconductor market is doing great, but not your big three. Not NVIDIA, not Broadcom, and sadly, not AMD. But the rest of everything, look at some of these moves today, right? Some names that haven't done anything over the past few years. Qualcomm coming alive, 3.5% today. Texas Instruments, right? 8.5%. When's the last time you saw an 8.5% day on Texas Instruments? Maybe some of you guys don't even follow this company. You got On Semi, a 5% day. That one's been muted and down for the past 2-3 years. MCHP, right? A lot of your analog devices plays starting to come alive a little bit. Look at MCHP, 11.65%. So the semiconductor landscape is broadening out a little bit. You got a lot of these very cyclical semiconductors, right? Not closely associated with the data center trade that are now really starting to come alive. And that's what's contributing to your semiconductor expansion right now. Not so much the big three. So please keep that in mind. Beautiful daily uptrend right now. Looking for a higher low on any consolidation, anything above 359. A lot of space here for the new higher low for further trend continuation after hesitating here on the weekly, tightening range a little bit. Beautiful breakout, new weekly uptrend, and you're pretty much in full bull expansion mode again. Beautiful monthly uptrend established too. And since you don't have the big three players, well, if the rest of semiconductors choose to take a little bit of a breather, you want to see some money rotate back into the dominant players here because they can provide a bit more room for some further lift on semiconductors, which would be a very good thing. And now lastly, moving into the Russell also having a good day, 1.33% to the upside, right? After having a daily downtrend, you got a nice engulfing move, rejection from our support range right here, 251 to 247. They got it back. We never closed the weekly candle below there. And we were always looking for this, right? The infamous either cup and handle, or if you guys call it the breakout retest, was looking very good, right? Retesting perfectly into the weekly 12 EMA, perfectly into your previous resistance support, and now maybe looking for a little bit more on the small cap front. We'd covered a lot of small caps yesterday on the channel, right? I was saying that I'm not playing IWM specifically. I wouldn't blame you for playing it if you really want to. I'm playing individual small cap companies, but small caps, provided that your thesis for a no recession scenario, soft landing or no landing, and provided you trust these bullish tailwinds, IWM could actually be a bit of an outperformer after doing a whole bunch of nothing, right, for the past few years. We're finally getting a nice breakout on them. That's everything for your overall landscape. The VIX, I mean, obviously, you got 3 big volatility catalysts in the next few days. If any one of these jobs reports comes out in a negative fashion, or if the Supreme Court rules that these tariffs are illegal, well, of course, you're going to have a bit of a spike in volatility. So pay attention to that. If you do see a spike in volatility in combination with some broad market declines, well, you know what type of order you should use for that, right? You're going to be probably looking to farm some credits in the markets on your favorite stocks. And I posted a video on Sunday, the top 5 options plays with some bonus plays. So if you haven't had a chance to pick a few of those already this week, well, you might have your chance over the next 3 days. So pay attention to your levels and pay attention to the volatility expansion. If it does happen, you guys know when you get the volatility expansion and some stock price declines, you can go shopping for some short put options way under the current stock prices and just pocket some of that juicy premium. So please keep that in mind. Moving on a little bit further here, the metals, we just talked about them in the introduction, but gold is looking very strong here on the daily after those increase in margin requirements by the mercantile exchanges, right? The COMEX, well, big drop here into the end of the year. And now gold recovering most of that. Still unclear whether or not we are going to tighten up in terms of a range right here, or if they're just going to carry this daily uptrend a bit further. For that, you'd have to pay attention truly to your control in terms of this 4-hour time frame, right? So pay attention. You lose your 4-hour uptrend, and it's pretty clear that you might just go into a bit of a consolidation range and tighten up the price, as we are somewhat overbought here still on the weekly timeframes. That is slight bearish divergence, and on the monthly timeframes, you are very overbought on this gold trade as well. So gold could be very interesting, a very interesting theme, and I think the theme for gold will still be biased to the upside for 2026, and the same can be said about names like silver as well. I do believe that there is going to be a long bias to these trades, but it may just not be a straight line. So please keep that in mind when you're looking at these metals plays. Silver having a very nice start to the week as well. That being said, no new all-time highs and still unclear whether or not they want to go for the straight daily uptrend continuation, straight moonshot, right? Or if these markets still need to consolidate a little bit more, perhaps before embarking into their next legs of rally. Any consolidation would be very well received in that respect, because you are weekly overbought conditions and you are monthly overbought conditions as well. A little consolidation never hurt anybody. If anything, it allows you to build a stronger base before potentially expanding a bit further, because we know if this gets too extended too quickly, well, the risk reward doesn't really improve for new buyers, does it? So keep that in mind for your metals. Moving on to some crypto names really quickly. So Bitcoin, unfortunately, not the best day of price action for Bitcoin, at least not falling off a cliff, right? We know that we have a nice daily uptrend of expansion, creating some space off the lows. 86,600 is your line in the sand, the daily higher lows for trying to maintain this daily uptrend. As of right now, you also got to crack and close above 94,000. Give me a close on the weekly above 94,000, and we could talk about a new weekly uptrend. If they just snap it all back, you're once again back in the gulag of consolidation. The end of the support range remains 85,000. So still a decent location to be picking up some Bitcoin if you enjoy this asset for the long-term future. But in terms of short-term swing trades into your volatility catalysts, very uncertain to be able to determine whether or not we actually, well, I mean, if jobs and everything is fine, you might just actually get the continuation of the breakout. If they're not fine, well, you would not be surprised if it snaps back. So short-term swing trades, I'm not in any short-term swing trades, but longer-term positions, nibbling a little bit just to add to my long-term equity positions on Bitcoin and Ethereum. Same concept, right? Nice daily uptrend, and you move lower looking for a higher low. A lot of space right now above 2,900, which is your higher low, to continue this daily uptrend, because we know that's all we have, right? You don't have the weekly uptrend. And without the weekly uptrend, you can't really say that the monthly lows have been established just yet. They need to change the trends one at a time. You got the daily, you don't have the weekly just yet. So who knows, right? Are we going to just stick around here or break through? Well, we don't know because we don't have the weekly time frames. And as a result, we can't put on that much size. But in terms of accumulating Ethereum here, possibly in the lower 3,000s range. If you have a long-term thesis on Ethereum, you have the Tom Lee thesis, you got the stablecoin thesis. If you enjoy Ethereum and you're looking for the next leg of monthly expansion through 2026 into 2027, perhaps, well, still a decent area to possibly be accumulating. But just keep in mind, you know, early this year, you're going to have a lot of volatility catalysts with the jobs reports and things like that, right? A lot of push and pull potentially into the early stage of the year, as expressed by this seasonality chart during the midterm years, in which you also have a lot of competing narratives right now. That's everything for your overall market rundown. Now, let's dive into some of our big tech names. So number one, as always, let's move into Apple. Apple down almost 2% today. No news, but Apple might finally be coming into one area that interests me, that we've been talking about now for a long time. So notice the continuation of the daily downtrend breakdown and loss of the big support range right here, which was 267. You don't have much price action much before the 256 down to 245 level, which is exactly the location that I've been talking to you guys about for a while, right? You lose the daily uptrend or continue losing the daily uptrend. You lose your weekly higher lows, you are into the infamous monthly consolidation phase for this fantastic company, which might bring you back down to previous resistance, current support, and the infamous 12-monthly EMA, where you guys know I like taking a lot of action. So if you see some further carry through prior to earnings, you might see me start to finally sell some puts on Apple again in terms of trying to farm some premium down there closer to the 12. And that is an area as well that we might be able to explore some swing trades for this company into 2026. I believe they'll have a great 2026. I think they'll have a very nice Q4 with the expansion of their iPhone suite of products and the beautiful sales that they've been having over the past few months. The valuation up here remains slightly extended, so any further discounts in terms of an extra 5-7% discount will be very well received, and I will be looking for some swing trades here around 245, 250, if they so give me that opportunity. Moving on to AMD right now. So AMD, unfortunately, starting off the week very strong and then just sadly unwinding everything. Now we still have somewhat of a daily uptrend. Line in the sand is right there, 209. If you flush this into tomorrow, guys, sadly, your breakout is just not happening just yet. The weekly is still in a form of a weekly uptrend right now, but it's just been doing a whole bunch of nothing, right? We do remember that there is still this big OpenAI gap right down there. And every time AMD has a bit of weakness down here, I am utilizing this as an opportunity to be selling some put options down here. So if the jobs numbers come out weaker than expected and the markets get dragged down and AMD gets dragged down as well, you probably will find AMD moves down to the 200 range. Well, then you start unlocking some nice opportunities to acquire further shares. If you're bullish on the company, keep in mind around 200, the valuation is quite low, and even selling some put options down here to 190, just the extension of this monthly consolidation period of time. So those are the two things I'll be looking for on AMD, either more shares at 200 or below, or possibly selling some put options down here, sub 200, closer to the 190 range. Could be quite interesting if you get a bit of VIX expansion coupled with a bit of a market decline here from the jobs reports. Just something to pay attention to for the next few days on AMD. Moving on to Amazon right now, we covered the Amazon news headlines, big daily uptrend breakout by Amazon, and closing slightly above the big infamous resistance range, which is roughly 240 all the way down to about 230. Now, it's not a big breakout, but it is something. The bulls claiming that area. Line in the sand remains 225 now, new daily higher lows established. So if they choose to consolidate after this big move, you got a lot of space, and now this entire area will transform into support, right? So that being said, looking very good for continuation of the expansion, unless they just choose to do this, right? If you get the bit of a retest right down there, same thing, still a good opportunity to be picking up some Amazon shares. It has not broken out just yet, but this might finally be Amazon's year in the sun as they have more and more efficiency gains through robotics as they keep printing money across all divisions of the business. They had very good guidance last quarter for Q4 and 2026. And in around, I'll remind you, 220, 230, the valuation was pretty good, right? Where I start drawing the line at further Amazon buys is like right about here, right? I've spent so much time accumulating Amazon, but if you break beyond 240 and you start stretching this valuation, that is when I say, all right, I'm full, I'm good. I have a bunch of leap call options that I've accumulated, a bunch of shares. If you get a bit of further decline, you might find me selling some put options again in the mid 220s. But if you start expanding like this, I will not chase. I am currently full on this position. Moving on to Google right now. Google not performing the best today, 0.87, but let's be honest. What has Google done over the past 5, 6, 7 trading days? A whole lot of nothing, right? I mean, the bulls are looking for continuation. We'll see if they can actually get it. In my opinion, it'll largely be dependent on the direction of the overall market. If the jobs reports come in negative, well, Google is probably a prime candidate to unwind somewhat rapidly, right? We know for a fact that we are still somewhat extended on the weekly RSI. We're still very extended on the monthly RSI as well, and just on the monthly timeframes altogether. So much space between us and that 12 EMA. So any negative catalyst with the broad market will be a perfect opportunity to make Google consolidate a little bit. So please keep that in mind. The bulls remain in full control, but I'm not adding anything up here on Google. I think we are very stretched on the multiple in terms of versus historical averages. It's not my favorite buy in the market right now. Am I holding all my long-term shares? Yes, but am I buying any more shares up here for the long term? No, and I'm also not starting any new swing trade positions. I just don't feel like there's good enough risk to reward up here versus other opportunities in the market right now. But Google, very strong company, and they should have a very good 2026. Moving on to Meta right now. Meta also doing a whole bunch of nothing in the last 2 weeks, just sideways, awkward consolidation between two levels, right? Overhead resistance, 680 to 700, and below support down here, 640 down about 630. So you need this one to get to break either way to really get me interested, right? Break down all the way down here, and I will be farming some short puts down here, or break to the upside, right? And then we're pretty much done in terms of our shares that we wanted to buy. So this is a nice accumulation zone. Here down to about 10% lower to 600, right? This is the accumulation range for Meta shares right now. If you're a long-term shareholder for Meta and you wanted to add, this is the perfect location to be doing so because you know they're just going for the monthly backtest here of the 12 EMA. So this little pocket right there is the area that I do want to play to accumulate some positions. But as of right now, Meta's just not really doing anything in terms of the price action, right? So please keep that in mind. But in around 630, the valuation is somewhat manageable. Still not somewhat, very manageable. Low 20s in terms of price to earnings and a 1.63 peg. Very solid numbers for the company. They have earnings coming in the first week of February. Moving on to Microsoft right now. Microsoft up 1.2% after challenging the lows, getting together a very nice afternoon run. Very soft morning start, but a nice afternoon close on Microsoft. That being said, we haven't really done much either, right? No daily trend change just yet. That would be a break above 488 to challenge our resistance range above. 500 down to about 490 is that big prior support range, which has been resistance for the company over the better part of the last month and a half at this point in time. So no trend change there. And if the bears just run away with this one again, send you a bit lower, well, then you're going to be really in juicy territory for Microsoft. 450 down to 430 is the big support range overall, the area in which I do not mind selling some put options. Here, though, around 470, we've been talking about this. It's a good area to be DCAing some Microsoft shares, right? Under a 30 forward multiple, a 1.66 peg. So this one for me remains a couple different things. Yes, it's a nice area to buy some long-term shares around the 12 EMA. We know that historically buying Microsoft around the 12 EMA in bull markets is usually a very attractive proposition, especially when it has a low valuation as well, lower than historical norms for Microsoft, right? So this one is a few different parts. It's leaps for me, not super heavy, but can be good for leaps. It is shares, but also on any big red days, right? I am selling some put options as deep as I can go, closer to the 460, 460 range to get my break even on those short puts down into the 450 area. Moving on a little bit further to good old Netflix. So Netflix still doing a whole bunch of nothing, guys. I mean, we've covered this one ad nauseum in the past few weeks as to why they're down. Obviously, it's still the weakness in relation to the Warner Brothers Discovery deal. And I do not expect many good things to come out of this stock price, right? Until perhaps your earnings, which is January the 20th, or until this Warner Brothers deal actually gets concluded, right? Until then, there's just too much noise. The short-term bears remain in control, a new leg to the daily downtrend, and this one has just been a weekly downtrend for the past few months overall. The bulls just nowhere to be seen, and it's completely normal. Stock is very noisy right now. Your next stop, if we do move lower, is 86 down about 82. Beautiful pocket right down there. Weekly coming very low on the RSI, and the previous two times that that's happened, I mean, other than 2022, it has been a local bottoming out area. It doesn't mean that you're absolutely at the bottom. It just means you're closer to the bottom than not. So I am having a lot of fun DCAing some Netflix shares, especially around the 26 EMA, which I will remind you as well, in bull markets, usually not a bad place to add some shares. At least historical precedent tells us as much. And around $90 in terms of a forward basis, you're trading at about a 27, 28, a 1.4 peg. So decent valuation, but Netflix, there's a lot of noise around the stock right now. So am I anticipating, right, as soon as the deal concludes and they have earnings, am I expecting this on Netflix? No, it'll be a longer possible road to recovery throughout the rest of this year. However, I do think that any and all buys placed around these positions will be rewarded, especially if you have a long-term time horizon on this company. Moving on to good old NVIDIA. So we talked about NVIDIA's price action being very awkward, right? The good old gap up opens and the sell-offs, the gap ups and the sell-offs, the gap ups and the sell-offs, and the gap ups and the sell-offs. That being said, we haven't really done anything, right? It's like a 2-3% range right now. So on the daily, you can barely see it. It's just kind of annoying if you're tracking NVIDIA's price at the open and then you look at it at the close, you always asking yourself in the last 3-4 days, what's going on with NVIDIA? Well, as a matter of fact, I mean, they're trying to set a new base of support and trying to go for the daily uptrend breakout. Now, every time we've attempted that breakout, we've kind of gotten rejected the past few days, but nice support below us still, right? This whole 185 to 178 location, powerful area of price action, resistance, support, resistance again. You would anticipate that this becomes support or stays as support for the stock. All in the weekly time frame, you are also going for the weekly breakout. So a bit of hesitation right now, but it's not looking bad, right? We're hugging the EMAs, you're hugging support. Nothing is extended in terms of on the daily RSI, not extended just yet. On the weekly RSI, not extended just yet. And even the monthly timeframes have cooled down as well. All this to say that the more NVIDIA curls up and coils up here while posting news events like this, right? Continuously raising guidance, well, it just means that the stock becomes more and more attractive as it kind of consolidates sideways. So between 185 and 175, I'm still a big fan of adding to this company, trading at a very low 23 forward multiple for 2026, very close to a 1 peg as well at this rate. Fantastic earnings, fantastic guidance, and great products from this company. I would not be surprised, guys, if this one does have a very decent year. After consolidating here on the monthly for a while, the next breakout leg for NVIDIA can be quite substantial. And I'll remind you, the next target at that point in time is going to be 225 psychological, and then of course 250. So I really like this one. And even though it hasn't been breaking out, it just allows us to accumulate a little bit more or play some short puts. I've been having a lot of fun, guys, over the past 3, 4, 5 months. Every time we're down into here, selling some puts in that whole sub 180 pocket has been very decent premium so far. Moving on to good old Tesla. Tesla down 4.14% overall, and this came off of the back that there was some concerns because NVIDIA yesterday at CES launched their own open source platform for autonomous driving, potentially competing with FSD from Tesla in the future. But here's what Elon Musk had to say about the thing. You're right, he says, in response to somebody saying that this could be a competing product for Tesla FSD. But Elon Musk saying the actual time from when FSD sort of works to where it is much safer than a human is several years. The legacy car companies won't design the cameras and AI computers into their cars at scale until several years after that. So this is maybe a competitive pressure on Tesla in 5 or 6 years, but probably longer. So Elon Musk addressing some of the concerns today. It didn't help the stock price just yet, though. That being said, support on Tesla stays put. 425 down to about 415, which was the previous support lows down there. Obviously, we've kind of lost all momentum on Tesla stock since they've released those deliveries earlier this month, obviously, right? Now, that being said, in terms of your weekly chart, I mean, it's not looking too dire for Tesla right now. You have this weekly downtrend into this big weekly move expansion. So a lot of space here. Anything above 390, still just looking for a weekly higher low, but maybe Tesla needs to consolidate a little bit more before moving substantially higher through 2026. We'll see what happens though. On the monthly, it's not looking terrible, right? If you just zoom out on this chart, it's just kind of awkward monthly consolidation. They had really nice expansion here into the end of the year and then just kind of lost it into early October. I mean, you had that nice little push December. You know what's funny? We brought this up when it happened, right? That like December 18th, 20th period, that's the exact same period of all-time highs in 2024. So I found that a little bit funny overall, but Tesla not looking the worst. If I were looking to possibly position, it would probably be somewhat lower down here around the $400 range for the full monthly retrace down there closer to the 12 EMA. You guys know nothing against Tesla, but that's how I trade on everything, right? I just literally showed this chart on Apple and so many other different things. If you find that retest of the 12 EMA, big resistance, big support, and the 12 could be an interesting location to kind of maybe shop for some swing trades if you are looking for some things of the nature in Tesla. Moving on to the 4 last ones here. Palantir up 3.26% today. Decent showing by Palantir, but that early year sell-off definitely still being felt by shareholders right now. It was a nice daily uptrend. You lost it. Now you're right back down into this big area of consolidation, the infamous 185 to 170. So a bit trendless on Palantir on the daily time frame right now. You would want to see the bulls recapture as much of this move as possible to set themselves up for a bit of a breakout again and retest and try it again on this breakout feature right now. The weekly chart also shows somewhat of a tightening range right now, but the higher lows are a lot lower, right? Trying to go for the higher lows again, establish the higher lows, and get the weekly uptrend back because they did lose it back here. So Palantir should be having a very good 2024. I mean, 2026, I don't know where I got the 2024 from. They should be having a very good 2026, but obviously valuation remains a concern. If we are buying Palantir up here, we have to be buying with a very long time horizon ahead of us. That being said, weekly no longer overbought. The monthly timeframes, though, still a little bit extended right here, but it's been a few months of consolidation so far on Palantir. If for whatever reason we see some big volatility in the markets in the next few days because of the news releases, and we get some big red candles down here, you might just see me playing some short puts around the 12 EMA, around the 150 range. You don't need to go down there, right? We just get 2 big red days on Palantir into the 160s, and I'll find probably some opportunities to sell some premium down here. And if I'm assigned on Palantir down here, I would not mind. It would be a nice 12 EMA backtest, possibly providing a better entry point. Moving on to SOFI right now. SOFI down 8%. At one point, SOFI was down over 10% today, because they got a double downgrade. Bank of America and Goldman Sachs reducing the share price expectations for SOFI. But you know what's funny? You remember when SOFI did this capital raise back on the 5th of December? Who are the underwriters for that deal backing the share offering at $27.50? Well, it was Bank of America and Goldman Sachs. So a bit of shenanigans going on here. Obviously, the price got hit because of those double downgrades today, but it was another nice opportunity if you were paying attention to possibly sell some puts down here in the $25 range. So although today didn't work out the best for SOFI shareholders in terms of giving back all of yesterday's gains and more, we didn't really lose anything. The higher lows were not lost at 25.81, so still a chance to once again attempt the breakout of this infamous resistance range. 30 to 28 has been very challenging, right? As resistance, they held it as support for a while, but since then it's just been big resistance. And it seems as though every time we pull into here, like back here, there was the share offering, right? And then today, well, there was the double downgrade. Apparently, there's always something that happens when we pull into this resistance range. So still a nice opportunity if you are a SOFI long-term bull to be accumulating. It's a big accumulation range, right? The weekly is kind of all over the place, just tightening up here. And on the monthly, you're just still in a phase of monthly consolidation after a nice 3-4x move. So still some monthly consolidation here. the end of which possibly 25 to 22. And that's been an area that I've been focusing a lot of my efforts to sell some put options, form some premium. And if I am assigned down there, I don't mind because it's big previous resistance, current support, and the valuation sub 27 is still quite manageable at a 1.14 peg and a mid sevens multiple. So unfortunate day for SOFI, but maybe just gives you more of a chance to accumulate if that is what you're trying to do to hold this company into the next few years. Moving on to Uber right now. Uber up 6% on a day where Tesla falls. Uber somehow rallies up. I mean, it makes perfect sense. Usually whenever there's autonomous vehicle news, right? Well, that favors anything other than Tesla, right? When it's broad market based, like what NVIDIA did yesterday, basically tentatively allowing all cars to implement their own full self-driving, various aspects of full self-driving across the board, right? Well, Uber, who has big network effects, does benefit from that. Now, that being said, you had a couple target price increases today, which did help. New daily uptrend. Higher lows are now set at 79.72. So any move lower from here, looking for a continuation of the daily uptrend. That's step number one. We bounced out of support in a nice fashion, 81 at about 75. You might remember that. So step number one has been achieved. New daily uptrend. Now, you got to turn this weekly around, man. Give me a nice bounce so far in terms of the fib bounce right now. It's an okay bounce, say 50% bounce. Give me a little bit more, come into resistance here, 87 up to 91. Then we can make an attempt to set up the weekly trend change. And only then will you be will you have sufficient confirmation that your monthly lows are actually established, that you might just be looking for a bit higher. Now, this has been a very nice period of consolidation for Uber for a few key different trade ideas. Number one, selling put options down here has been a very profitable endeavor. But also, if we were looking to add some shares for Uber for the long term at 80 bucks, it's pretty good, man. Very low valuation right now, low 20s forward PE, a 1.4 peg, and a very nice free cash flow yield. And last but not least, good old TSM. TSM up 1.61% today. New all-time high. TSM really coming in strong the last 4, 5, 6 days of trading right now. That being said, pulling a bit away from our resistance range, right? Previous resistance remains put at 310, down about 300. So if TSM chooses to backtest anywhere, it likely will be there. And that might just be a nice breakout, retest, and run trade opportunity. Trading out up here, a bit too extended, going for a bit too much momentum follow through, in my opinion. Weekly uptrend remains nice, though. If you do get the retest, could be an interesting breakout retest trade. As I said, I'm not currently positioned in any swing trades on TSM right now, but I do have a bunch of long-term shares for my long-term portfolio. The last time we did the valuation here was at 275, so figured I should maybe give an update. Let's do it at 320 just to give you guys an idea of where we're trading at right now in terms of forward price to earnings, right? So at 320 with that same EPS, 320 by 1253, you're trading at a 25.6 forward EPS multiple forward price to earnings, which is not terrible. Divided by their EPS growth rate, it's a 1.34 peg. So, arguably still somewhat cheap. Now, a lot of the reason that TSM trades somewhat cheaper than some of its sector peers is obviously because of the geopolitical risks for the company. Now, that's always been the case. This is nothing new. However, that being said, it's still somewhat attractive, right? As a result, I'm not really selling anything for my long-term shares, but I'm not necessarily adding anything new, especially during this breakout. The time to be nibbling, we were talking about it many times on the channel in the past 3 months. The time to be nibbling was during this consolidation phase. Now you got the nice expansion phase, so I'm just kind of holding what I have. No call options for me at this current time. And that wraps up your whole market rundown. Hopefully you guys enjoyed that. Now, let's spend the next 10 minutes or so on the biggest gainers and losers of the day. So let's spend a bit of time here on the biggest losers of the day. We covered SOFI already, but T Energy, you might remember me starting a position down here between the $4 and $3 range, currently working very nicely, but approaching big resistance right now. This whole $8 to roughly $7 range is big resistance for the company. It's up a lot. However, any pullbacks in terms of short-term history, right, in terms of the next few weeks or so, could be a very attractive opportunity if you are in this one for this small cap name. About a $1.87 billion company right now. And I'll remind you, this is just vertically integrated solar. Everything from the actual silicon to the actual solar panels are manufactured in the United States. We're kind of reducing the reliance on China, which is the biggest solar panel outputter on the planet right now. And you can see the forward sales estimates are very strong for this company. This was my thesis into 2026 and 2027. So T Energy, if you don't know about it, it's very popular. We were kind of in it before it became super popular on Twitter and Reddit and things like that. Probably still one of my favorite picks into this year. I shared it early on the channel, haven't talked about it too much, but any pullbacks, maybe I will add a bit to my position overall, which I'll be looking to carry probably like a $5-7 billion market cap into the next 2 years if they effectively execute their business plan and business model. Now, Iris Energy right here. So they were down a little bit on the day, but we are going for the daily uptrend on a number of names right here. Iris Energy, NBIS also changing the daily uptrend pattern right now. And you can see this all across the board, across some of your data center specific plays, right? What's good about these names is now you have a tradable bottom. We were waiting for the new daily uptrend. The new daily uptrend is something like this. It gives you a tradable low. If we're looking to take some swing trades and go for the monthly re-expansion cycle, perhaps into Q1, if that's what the market wants to do, well, at least you have a tradable bottom. Your daily higher lows are now your stop loss. So positioning on names like this in Iris Energy, tradable stop loss below here at 37, and then you'll be targeting the upside resistance targets, or possibly even a little bit further if you're going for the larger expansion trades. But at least now we've been patient and waiting for our tradable bottoms. So that's always a key feature when we're looking for swing trades, right? You might remember we did the same thing on Rocket Lab. You waited for the daily uptrend shift, and then you just expanded for the trade. And it worked beautifully on Rocket Lab. We will see if we're able to carry that same feature into these data center specific names. High beta has been performing really well early start to the year, so keep that in mind. But also some of these names, whichever one you prefer, whether that's APLD or CIFR, they all kind of look the same, as you can see, right? Daily uptrend shifts, et cetera, et cetera, et cetera. If you're looking to accumulate some shares, still some time, as it is a multi-year thesis, of course, for a lot of these companies. But now even some swing trades are kind of on the table for a lot of those names overall. Spotify, don't talk about Spotify too much, but Spotify, some people ask me, where would I buy it? I'd probably be buying this one if it comes down here to lower 500s. We did the multiple after their earnings in Q3, early November, and we derived that, yeah, it was okay down here, but keep in mind this EPS growth rate will be slowing down. So I need to get a bit better of a price for me to be interested in Spotify. Spotify for me is a 500. If it doesn't come down there, no problem at all. I have so many other companies that I'm focused on right now. That's just one that we could pay attention to soon, and maybe talking about A-Lab as well. Some people confuse as to why A-Lab is down. A-Lab is just very high beta as well. Down here around the 140 range. 12 EMA, decent little pickup area for A-Lab if it's a company that you like. Figured I should cover it because many people ask me about it on a daily basis. And moving into ANET as well. ANET could be a very nice pickup if we retest this 12 EMA down here, or just selling some put options, right? Just going for the monthly breakout retest. Super solid networking company, very high margins, very good revenue and EPS growth. And around 130, the valuation is manageable. I'm not going to say cheap. I wouldn't dare say cheap, but it is more manageable. Down here, 120, that's when it starts to get on the cheaper side of things, right? Not cheap, but like cheaper than neutral. Let's just put it that way, right? So decent performance across the board today on some of these companies. To the upside, we had many different names. Now we're going to play Is It Too Late for SanDisk? Yes, as a matter of fact, yes, indeed, right? If you're looking for the daily uptrend shifts, guys, right? When you have big consolidation periods like this and you're looking for tradable bottoms, you got to pay attention to the daily uptrend shifts, right? When you get the daily uptrend shifts, you get the stop losses in motion, and then you can kind of carry the trades through previous all-time highs. But buying it up here, that's when you kind of draw the line, right? You could have justified purchases down in the lower 200 range because at that point, the valuation still somewhat made sense. Now, at this point, it's a $50 billion company, and I get it. Memory prices are through the roof, and memory demand is through the roof as well. But you're always going to be mindful of what you're paying for something, right? Especially on a price to sales basis. I mean, this company's going to be making a lot of sales in the next few years. But right now, right, you're trading at about a 5 forward price to sales for 2026. It's not crazy, but keep in mind, right? It's like you're buying it very, very extended right now. So any buys placed up here, can they work? Of course they can work, but you never want to feel like you're chasing something too hard. And at this point, SanDisk and Micron, we were saying it additionally, right? You are chasing the price, whether you like it or not. You can justify the valuation if you just close your eyes and focus on the multiples right here. It still makes sense, but let's be honest, right? These are very extended on a technical basis right now. And this is not my favorite type of trade. I will trade them when you consolidate after a big extension period like this, and then give us re-entries. But what I will not do is just blindly buy this for pure valuation alone and pure momentum alone. If that's your style, best of luck to you. Not my personal style, though. Moving on to a company like, Rocket Lab is kind of the same concept as well, right? The last entries for Rocket Lab, we said it on the channel, we're down here below 50. It gave us a better margin of safety. it's all the way up here at 86 right now. And I'll remind you, Rocket Lab, I mean, the revenue generation from this company is far into the future, right? So that being said, Rocket Lab, I mean, even in 2028, they're only going to be making $1.5 billion. They're trading at $45 billion market cap. So is it a mini SpaceX? Yes, absolutely. Are we going to be looking forward to what they have for their Neutron rockets this year? Absolutely. But as with anything, there's a maximum price that I am willing to pay, and there should be a maximum price that you are willing to pay. Any shares of Rocket Lab purchased up here, I hope you guys have a 3 to 5 year time horizon to wait for the rest of the market cap expansion, because it can be pretty volatile, right? The momentum is there. The narrative is there. The space trade is going to be front and center. SpaceX is IPOing this year. So I don't blame you for wanting to participate in this name. This name for me at this stage, if I had any shares, it would be a hold. It wouldn't necessarily be a buy up here. It would just be a hold. I wouldn't be selling anything because I'm probably into my compound annual growth rates, especially if my shares that I acquired are down here or down here. Would I be adding anything new up here though? No, quite debatable. That being said, we can move on to other names like Zeta. Is Zeta a buy up here even at $24? In my opinion, yes, because Zeta is currently trading at a $5.8 billion market cap. When we look at their sales projections for 2027 or 2026 even, 1.7, 1.94 billion. Very attractive. It's around a 3.5 price to sales. That is manageable. So even though Zeta is breaking out right there, and even though I know what you're saying, oh, but I could have bought it down here. Yeah, well, it's not down there anymore. Is it still a buy up here? I do believe that it is still a buy, and even I might be exploring starting a newer position on Zeta in the foreseeable future. Moving into UiPath. UiPath has been also one that I've been pounding the table on recently. Nice accumulation range right here, 16 to 17. This one's looking pretty good for some expansion back into resistance and maybe more throughout 2026. Still one of my favorite smaller cap players, under $10 billion. Very nice path to growth. No pun intended, because the ticker is path. Anyways, sorry about that. Very nice path to growth into the future, and their first quarter of GAAP profitable EPS last quarter, which is why they had that big, massive earnings rally. So this is one of my favorite software plays into 2026. So maybe do your own research if you are also interested in AI-specific software names out there. Shout out to other names, other small cap positions that I've been building. I've been building a nice position on TMDX during this consolidation. It is a $4.5 billion company right now with very decent sales pipelines into the future. If we take a look right here into 2025, 2026, $700 billion. So not trading super rich right now. And they also do have a flip to EPS positivity, which is what I like to look at for some of these smaller cap growth stocks overall. One of my favorite medical devices names into 2026 as well, just something to keep in mind. And then ISRG coming into almost new all-time highs right now. This is also one that I spent a good portion of 2025 buying in or around the lows. We covered their Q3 earnings in October. Super high quality company, but I will give it to you guys. It's not cheap right now anymore, right? I think they have a very long runway of continued expansion, but it is a $200 billion company that does trade relatively rich. So I'm not adding any more ISRG up here, but would I be still holding some shares? The answer is yes, absolutely. So I figured I should be addressing that one for some of you guys that might be interested. A few more, we can do a few more. Grab is a buy for me down here around the $5 range. I think their expansion in 2026 is going to happen. The monthly chart is also looking quite decent in terms of just, you know, following along slowly but surely with the monthly breakout pattern. So we'll see what they can do this year. But also one of my favorite names that I'm kind of carrying into this year. Shout out to Mercado Libre as well. Mercado Libre is still a buy, even though it's no longer at the lows. Still a buy in around 2000s. Valuation is too cheap on this one, in my humble opinion. So keep that in mind. Still one of my favorite, let's call it large cap growth plays into this upcoming year. And even a company like Affirm should be very solid into this year. Probably one of my favorite consumer discretionary plays because they cover everything, right? Rather than me having to buy Chipotle or Lululemon or Nike or going for any recovery story in consumer cyclicals, I'd rather just play a company, a buy now, pay later company, a network effect company, such as Affirm, right? Coming off of nice monthly higher lows with fantastic user growth, fantastic metric growth all across the board, and still somewhat relatively cheap. I'd rather play this, Visa and MasterCard, than go for individual cyclical names, but that's just me. And shout out as well, guys, to some of the defense corporations, right? Honeywell off the lows, General Dynamics, big expansion here. Lockheed Martin, this is all since Venezuela, right? Big expansion here on Lockheed Martin as well. Lockheed Martin looks really good into 2026, in my opinion. RTX, great continuation. I wouldn't be buying up here, but holding for sure. And some companies as well. like AVAV having a nice breakout right here, and even Kratos having a very nice breakout. Defense corporations, pay attention to the defense corporations. They are some of the biggest beneficiaries of the big, beautiful bill in terms of subsidies towards the sector. So military stocks could be a very nice niche in terms of positioning into 2026. And I think that pretty much covers everything that I wanted to talk about today overall. Obviously, there's many more, and we'll try to bring the variety as we move further into the rest of the week as more and more companies shift from highs to lows. But I think on a weekly basis, I do a pretty good job of covering most aspects of the market and most aspects of this list as well. So that's everything for me today, guys. Hopefully you enjoyed today's video. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We do these videos every Monday to Friday after the close. And last but not least, if you have any questions, please always feel free to leave them down below in the comments section. I always love hearing from you guys and answering. I'll answer as soon as possible, of course, for that comment section. And thank you so much for all your support. Looking forward to having another beautiful year in the markets with all you guys on the channel. And last but not least, if you were considering, or if you're tired of trading and investing in the markets all by yourself and you wanted to do so as part of a community of over 300 members such as yourself, you may consider trading and investing in the markets with us in our Discord group. The link to join us is down below in the video description. And in our group, we do a bunch of things, but you get access to all of my trades in real time, all of my trades, all of my insights, whether we're trading the wheel strategy, call debit spreads, leap call options, long-term portfolio positions, trades with shares for some swings as well. Everything that I do on a daily basis in the markets, you get access to in real time. You also get access to our private morning live streams. Every Monday to Friday, I stream for about 2.5 hours in the morning. At the open, I trade live, and then I take all your guys' questions on your stocks, your options, and your long-term portfolios. You also get access to our private video education section, almost 15 hours of educational content in that section overall, where I give you guys how I do fundamental analysis, technical analysis, how I build a trading portfolio depending on the size that you're starting with, how to build a long-term portfolio for compounding growth, and all my trading strategies, whether it's credit spreads, debit spreads, leaps, different wheel strategies, all that good stuff is in the educational section of our Discord. A whole bunch of content that I will probably never put on YouTube overall. You can also ask me questions in all of our chat rooms throughout the day, chat with me, chat with our members, ask us questions, and we're always very fast to help you out. And last but not least, as an added benefit, you do get access to all of my watch lists and all of my charts. Yes, whenever you see my charts with support resistance areas, such as on Amazon right now, or you see fundamental breakdowns on hundreds of companies from earnings or otherwise, you just get to copy paste all of my charts and all of your watch lists. In the event that you didn't want to do it yourself, you can just copy paste what I have if you like what I do. Those are just a lot of the main components from the Discord. Of course, there's a couple more things in there. And if you were willing to join us, as I say, the link is down below in the video description. So hopefully I get to see a few more of you guys in there trading with us into 2026. Everybody had a lot of success in 2025. We're going to keep it going into 2026, and hopefully you can be a part of it with us as well. The link to join us is down below in the video description. And if not, well, I guess I'll see you right back here on the channel, guys. Take care. That's it for me. I'll see you guys tomorrow after the close. Have a good day in the markets tomorrow. Peace.